The epic meltdown in the stock market continued today. If you thought the beginning of this week was bad, that was just a warm-up for what we experienced today. This was the worst day for the Dow Jones Industrial Average since 1987. For those of you old enough to remember those days, you may recall that the Dow Jones actually torpedoed over 20% that particular day. But every single day since then, this is actually the worst day for the Dow Jones, including the time period of 2008 and 2009. So quite extraordinary what we're dealing with right now with the coronavirus news and everything else that is kind of being thrown into chaos right now with so many cancellations in the sports world, with concerts and you name it. It is a crazy time right now, and there is ramifications from an economic perspective that are definitely flowing through the stock market right now. So we're in bear markets across the board. We're down more than 20% from all four of our major U.S. indices. It was the fastest ever move from an all-time high into a bear market. So this is a very first that anybody in the history of the U.S. stock market has ever experienced, what we're all dealing with right now. So really extraordinary times. We're going to talk about all of that, discuss what that means for our posture, and then we're going to take a look at a trade application example on a stalwart stock that is in the midst of its worst month in over 20 years. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's March 12th, 2020. First of all, if you're new, welcome aboard. Remember to go over to our YouTube channel, click subscribe, and while you're over there, make sure you sign up for our email distribution list as well. You'll find that in the description area. That way you can be entitled to all the stocks that are hitting overbought and oversold cluster signals in the S&P 500, and I have a feeling tonight there's going to be a boatload of companies with oversold cluster signals. In addition to that, we're heavy users of Twitter. David and I have both been quite active on Twitter here recently with all these this news flying around, so make sure you're following both of us. If you want to follow me, my handle is @BrandonVanZ. We appreciate those of you that click like and retweet to help encourage us to do these videos on a daily basis for you. And then lastly, we have a presence on Facebook as well. Feel free to join our group at the web address embedded in the logo in front of you. All right, with that, let's go ahead and jump into our action. As you can see here, I've got a slightly different view than normal. With today being such a historic day, just for posterity purposes, there may be folks in the future that come back to this day and wonder what was going on in the stock market on March 12th of 2020. And I kind of wanted to highlight the last 24 hours to give you a sense of the extreme nature of this virus news that we're all dealing with. This all happened in the last 24 hours. So brace yourself. It's been a crazy, chaotic 24 hours here. So 21 hours ago, I posted this on Twitter, just kind of having a little bit of a chat about what was going on with the futures market. This was immediately after President Trump had a rare nightly appearance on primetime, discussing kind of the state of affairs that we find ourselves in. And one of the key takeaways from that speech was a travel ban from the United States and Europe. And that is for 30 days at this particular point. As soon as he was kind of delivering that address, the futures markets were already starting to tank. And just a couple of minutes after the speech was done, we were already down 2%. By the time I went to bed last night, we were probably down about 4%. So we had a good idea that it was going to be an ugly open to the session here today on this ugly Thursday that we just experienced. Now, after that presidential speech, Tom Hanks, right? This is a worldwide celebrity. Most people will know him, no matter where you're at in the globe. Came down with the coronavirus, as well as Rita Wilson. So this is not just an economic story right now, what we talk about every single day in these videos and the concerns that we have as investors around the world. This is a situation that is affecting many people, regardless of your race, class, nationality, etc. This is a biological threat that we are all dealing with. After that, the next retweet came in from me. This is, again, 21 hours ago. The NBA has suspended the season. I don't know if that's ever happened before. And by the way, the big reason behind why the NBA has suspended its season was right here. Rudy Gobert, which is a very popular guy around my parts. I actually live in Utah myself. He tested positive for COVID-19. Later was found out that his teammate, Donovan Mitchell, also was. So as soon as they found out that he tested positive, they ran out onto the court there in Oklahoma City where the Utah Jazz were going to play, and they said, we're calling off the game. And as soon as that happened, word started spreading throughout that this was basically the final night of the NBA. So just like that, it's done. After that, some other things coming in from other people that I respect on Twitter. Here's Ryan Dietrich talking about the fastest move ever into a bear market. There's Andy Nyquist, which, by the way, we appreciate Andy and all his support there with See It Market. But he made an interesting comment about Walmart holding up better for relative strength during past bear markets. And that's something that I have verified myself. I've taught classes on that with my dividend classes where we've gone through all the aristocrats, and we found that Walmart was the one that kind of emerged and held up the best from the 2008 and 2009 crisis as well. We'll see if this time is different or not. But clearly, if you're looking at social media, a lot of empty shelves out there where toilet paper and bottled water used to be. So Walmart probably going to have a little bit of a sales increase here as a result of the panic that's taking place. Of course, there's David's post from last night regarding the market outlook, and then my 9 at 9 this morning about some of those companies that were going to be down. The cruise ships were going to be down. The airlines were going to be down. Oil companies, you name it. Really, really ugly there. I posted this morning, which is a rundown of all the times the New York Stock Exchange has had to shut down. There is legitimate fear in the system right now that is going to be required. Now, whether that happens or not is anybody's guess, but there's legitimate talk about that right now. And given how much the current president talks about the stock market, without a doubt, he's tuning in, right? He's recognizing the meltdown that investors are experiencing, the pain that they're experiencing. It's possible he just pulls the plug on the stock market for a while. Now, remember, that can be impactful to you in a variety of ways as well. Some of you have open options positions. Start thinking through what will happen to your open options positions if the stock market is shut down for, let's say, a month. I remember trading just after 9/11, and those of you that were trading back then will recall they shut the stock market down for the next several days after that. So this is a situation where we don't have a handle on the solution yet. Who knows? There's been times during wars where the stock market has been shut down for weeks, if not months. You never know when we get to a situation like that. So I don't want to sound too alarmist here, but make sure you're taking care of your portfolio and think about what your open options positions are and what would happen if the stock market shut down. You couldn't access things along the way. So make sure you're tidying up your accounts just to be on the safe side. Here's Eddie talking about how 2.5 years of gains in the stock market just evaporated in 3 weeks. Remarkable swiftness to this. I mentioned the VIX here. This was still this morning. This was only 8 hours ago. The VIX hit 69. This was in the morning, but by the time that we closed up shop here this afternoon, the VIX actually closed at 75. Now, that is actually the highest level or within spitting distance of the highest level of a closing weekly candles. We'll talk about that here in just a second as well. Here was an interesting tweet from Christopher Cole talking about the length of a bear market versus a bull market. So I suppose if there is any silver lining to all of this, the good news is bear markets tend to last a lot less months than bull markets do. So if we are entering into an extended period of economic stress, we might need to batten down the hatches. But hopefully within, let's call it 18 months or so, like a typical bear market, we can start to look towards greater things in front of us. And then wanted to share this as well. This quote from Warren Buffett, many of you know I'm a big Buffett fan. I've gone to the Berkshire Hathaway meeting for the last 15 years and was planning on going again this year. However, at this point, I'm not so sure they're going to have it. So we'll see there. But I've been a longtime admirer of Mr. Buffett, and he's got a lot of wonderful quotes out there that really get you to think. But there was one quote in particular that I just couldn't shake out of my head here today, and it was this one. I buy on the assumption that they could close the stock market the next day and not reopen it for the next 5 years. So that kind of brings together a couple of thoughts. First of all, what I just mentioned a moment ago, you don't know what the future holds. There is no rule book in the stock market. If the president wants to shut down the stock market, he can do it. So if there's a shutdown stock market, what companies do you want to have in your portfolio? Hopefully, whatever you have in your portfolio is a survivable company and one that has a long history of operational profits and success. So that's one thing that I think of when I think of that quote. The other thing that I think of is how Buffett generally is willing to step into markets to look for opportunities when other people get incredibly nervous. And so I would love to see what Buffett is up to today, because I'm sure he's accepting lots and lots of phone calls. Now, like we talked about today in my question and answer session for my premium members, that is posted now. If you want to hear my thoughts on this market and Buffett and some of the things I think he could be doing with his money, feel free to check out that the recording on our calendar now. But I have a feeling that he's been answering the phone call a lot today, or answering the phone a lot today from people that are a little bit frazzled, institutions that may be frazzled, businesses that are frazzled, and wondering if Berkshire would step in and provide capital. Now, we're not in a credit crisis right now, but we've heard from Boeing, we've heard from Hilton and other companies that are drawing down their available credit. And that's starting to cause some concerns. There's private equity firms that are doing that as well. Remember, in 2008 and 2009, credit froze up. You couldn't access capital. And if you were lucky enough to do it, you would have to pay through the nose to access that capital. Buffett has capital. He has, $120 billion the last we checked. So he's probably been answering the phone call a lot today and, chatting with folks who are interested in a partnership with Berkshire, mostly interested in their money and wondering how expensive that money would be. But keep that in the back of your mind, because we are in unprecedented times here in a lot of ways. And you never know when the stock market actually will be closed down for the foreseeable future. Now, do I personally believe it's going to close for the next 5 years? No, I don't. But would I be shocked if I heard an announcement that the stock market was going to close for the next month? I wouldn't be shocked by that. And that would have been almost unheard of to even utter those words just 1 month ago, just to give you a sense of how extraordinary the times are that we are living in right now. Now, as the day continued to go on, we found out that Duke and Kansas suspended all of their athletics. As that happened, I retweeted this thing about Utah here because this affects me directly. Utah is no longer allowing groups of over 100 people to be together. So I'm wondering what's going to happen with my kid in school and everything else that we do from a personal life perspective. The Fear and Greed Index here from Ryan Dietrich again shows that it is tying the all-time low set in December of 2018. Right? This is not a normal pullback we are experiencing here. If you're newer to the market and wondering, is this what it's like when the stock market pulls back? No, it's not what it's like at all. This is an extreme version. This is a meltdown mode that we find ourselves in right now. Eddie says here in the last 93 years, the Dow has had 13 bear markets of declines of 20% or more, and only twice did the economy not go into a recession. At this point, I don't see how our economy doesn't go into a recession. I think it's a foregone conclusion at this point, considering the amount of people who are being forced to stay home from work, who are not traveling, who are not driving, who are not going out to eat. Right now, I'm making the assumption that we are absolutely going into a recession. And then we found out Major League Baseball is going to suspend all its operations due to the coronavirus for the foreseeable future. Here's what I mentioned before about the VIX as well. The VIX closed up here close to 75. And the highest reading on the VIX from a closing price basis on a weekly basis was 79. And that happened during the financial crisis of 2008 and 2009. And then here was the end crescendo of the day. The Dow Jones closed down 2,300 points, its worst percentage drop since 1987. Truly remarkable. After that, NCAA came out and said no March Madness. That's something that I've enjoyed doing with my college buddies for the last 16 years. We've had a tradition of getting together to watch college basketball. That's gone. Normal life is being disrupted in a major way right now. What we are seeing on Wall Street is a reflection of all of that disturbance of real life. And then just before I went to video this here tonight, or record this tonight, Disney came out and announced that it was closing Disneyland for the foreseeable future. So sorry to spend so much time on that, but I felt like it was important to kind of absorb the 24-hour period that we just had that led to the second biggest market meltdown in the last 40 years. In one single day here, the Dow Jones down 10% in one single day. Let's get back on over here now to the Thinkorswim platform. And I want to show you some other remarkable statistics. You can see here that the S&P 500 itself was down 9.5% today. So not quite 10%, but knocking on the door of that. And just Monday, we were talking about the astonishing size of that candle on Monday when we were down 7.5%. This candle that we had today dwarfs that. These two candles happened in one single calendar week. So this is one of the most horrifying weeks that we've experienced as investors. You can see again down here, the VIX is sitting at about 75 at this point. Remember, that measures fear. If you didn't think the coronavirus was a big deal, all you have to do is look at the financial markets where money is involved. Money is scared right now beyond belief. Now that can mean opportunity as well. We have to remember that. If we could all go back in the time machine and put ourselves back in 2008 and 2009 and just load up with the highest quality companies and then just turn off the TV for the next year, we would have made out pretty good. So without a doubt, there's going to be opportunities that emerge from this. But it is very dangerous because we don't know what the solution is yet. And it kind of feels like this cascading, drop in the stock market is not going to get resolved fully until we have more of a handle on the coronavirus itself. Hopefully that happens sooner rather than later. But until then, life as we know it is disrupted. When life as we know it is disrupted, the economics of our life, every time we get our wallet out, our purse out, and pay for something, that gets disrupted as well. Right now, what are you spending money on? You're probably spending money on consumer staples companies, toilet paper and Clorox wipes and bottled water or whatever it is, but you're probably not going to be buying a new car tomorrow. Unless you're a really happy short seller right now. But this is an extraordinary day that we've had here. If you want to go back and take a look at, let's say, a 20-year monthly chart, one of the things that a lot of people are surprised by is this is vying right here for the biggest 1 month meltdown that the stock market has had in 2 decades. That means my entire trading career. I started trading in January of 2000. So I can literally say what we are experiencing right now is only second to what we experienced in 2008. This was October of 2008 when Lehman Brothers basically disappeared. And, a 100-year-old institution on Wall Street, and so many other banks went belly up, and, government bailouts were taking place left and right. So think about that era and then think about where we're at right now. We are basically neck and neck with that disastrous economic period right there, at least on a 1 month basis. Who knows what the future holds, but just to put things in perspective, what we are dealing with right now is extreme by almost every measure. Now, if that weren't enough, I want to show you one other extreme statistic that may be somewhat shocking. I know it was for me. Coming on over here to the Market Watch Visualize area. What I've got here is the Index Watch and then the S&P 500. And I wanted to show you that today is the first day in my memory. Now, maybe this has happened before. I'm sure some market historians can dig up this information. But this is the first day in my own personal memory where the S&P 500 only had one single company in the green. Now, some of you might be wondering, well, what company was that? Is it a coronavirus play? No, it wasn't. It was a company that's down probably 60 or 70% this week, Occidental Petroleum. So you consider it a dead cat bounce, and it wasn't even up 1%. So out of 500 companies in the S&P 500, you had one single company higher out of 500. And that one company was up less than 1%. Let that sink in for a second. This was an avalanche of selling today, and I don't care where you were in the market, you were not saved today. If you are in the market, you experienced pain today. I know I certainly did. You couldn't be bailed out by the utilities today. You couldn't be bailed out by the REITs today. You couldn't be bailed out by gold today. That was a bit surprising. Bitcoin got annihilated today. Bonds were down today. I mean, if you were in the market today and you were long something, unless it was like you were long a VIX product or an inverse ETF or something along those lines, but if you were long traditional assets today, you had a meltdown in your portfolio. I hope you're not on margin. That's one of the things that I was talking to my students about today. That's the one saving grace of this, is that hopefully you're knowledgeable enough not to be on margin. Now, I know that's not always going to be the case. And if you are on margin, tighten up things to get to where you need to be. And if you're not going to do it, your broker will do it for you. But imagine having to flush your entire portfolio down the drain on a day like today at the worst of prices, just simply because you wanted to have a little bit of leverage in the market. So, be careful out there with that margin and leverage. I'm not here to tell you what to do because I'm not your licensed advisor. I will just merely give you the common sense phrase of be careful and stay vigilant. But today was an avalanche of selling, no matter how you slice it. Of course, if you wanted to look at the heat map, that was a disaster as well. Nothing but red on there, except for, as I mentioned, the one oil company. So, ugly day across the board. No matter who you were, what you were invested in, you got absolutely damaged here today. Let's go ahead and take a look here at the 4 grid. As we look at the 4 grid, this is chart 4B for those of you that are premium members following along at home. Remember, premium members have access to all 50 of the charts that David and I use. As you're looking at this, you're seeing like kind of unbelievable things, but because we've had such extreme movements in the last 3 weeks, it doesn't even look like a market crash. I mean, isn't that kind of amazing to think about? We just experienced the worst single day in the stock market since 1987. Normally, you would have thought ahead of time that if you would have had a 10% meltdown in the stock market in one single day, that the chart would look like it had just completely fallen off of a cliff. But this is all relative, and because most of the candles we've been dealing with in the last 3 weeks have been like 4-5% types of moves, it almost looks like it's a normal day for the market. That's about as scary as anything you're ever going to see right there. But these are historically terrible days that we're dealing with. Now, no surprise, we're at another low. That was one of the things I tweeted out yesterday prior to that 24-hour period that I showed you. One of the more fascinating things about the market is within just the last month, the S&P 500 has gone from an all-time high to a 52-week low. And that is incredibly rare. And of course, many, many companies within the S&P 500 can make the exact same claim. In a normal operating market, just to have 1 or 2 companies be able to achieve that is pretty unheard of. You would have to have like a very extraordinary event, like the feds were, raiding their corporate headquarters or something along those lines. We're talking about the entire stock market that went from an all-time high to a 52-week low in less than 1 month's worth of time here. So the S&P 500 down 9.5%. The Dow Jones down 9.99%. So of course, round up, and that's your 10% loss right there. NASDAQ Composite down 9.43%. The Russell 2000, 11.18%. Small caps got annihilated. So it's ugly out there no matter where you were. Every single sector got just blasted here today. Every single index, that is long stocks, was blasted here today. All of these charts are now in bear market territory, meaning they're all down 20% from the highs. All of them have clusters today as well. That should not be surprising. Oversold cluster signals are showing up according to the market forecast. Now, obviously, that is dangerous because we can see there have been other clusters in the past. We had a cluster right here on the S&P 500 on the 27th. Now, we did end up having a rally in the next 5 days, so perhaps there's a little bit of silver lining there. Maybe things have gotten a bit extreme, and today did feel panicky. I mean, when you got the VIX at 75, there is definitely panic in the system. When you only have one stock in the S&P 500 that's up, there is panic in the system. So is it conceivable that we have an up day here sooner rather than later? I think it's conceivable because there was so much fear out there. They might need to rip it back the other direction here sooner rather than later. One of the stranger anomalies of what we're dealing with is tomorrow happens to be Friday the 13th. Most of you know that tends to be considered a bad luck day. Whether there's any seriousness to that from a stock market perspective is anybody's guess. But generally speaking, Friday the 13th is known as one of the spookier days, at least in Western cultures. So we'll see what that brings tomorrow. But right now, we are in extreme oversold conditions. And if we get some sort of a pop back rally, I would expect it to be fairly extreme as well, talking about, let's say, 4 or 5% up day type of a day if we are to get it. But here's the problem. Until this coronavirus thing gets solved, any sort of rebound that we get is likely a rebound to be sold if you are an active trader. If you're a long-term investor, you might choose to ride through the storm. But if you're an active trader, you're probably in the mindset right now that if you get some sort of a bounce, you're looking to take advantage of that by lightening up on your long positions or reloading on your bearish positions. So pretty ugly there. I talked about the sectors already, but let's go ahead and just kind of confirm that here. So make sure everybody's on the same page on this historic day. Red across the board, a clean sweep. Now here's something I've never seen before. Boy, how many times have I said that recently? The energy sector, XLE, is literally cut in half in 3 months. Now I made that joke on Twitter on Sunday night when I saw oil prices down 20% because oil itself was down 50% in the last 3 months. And I joked that, did I miss a 2-for-1 stock split somewhere? Well, now it's happening to the energy stocks themselves as well. Right here is the proof in the pudding. 51% drop in energy stocks in 3 months worth of time. Now that by itself is unbelievable. But when you start looking at the other numbers of these sectors, the financials are down 34%. Now, there's been a lot of people that have claimed that the financials have never been in a more solid position than they find themselves in today. That they learned their lessons from 2008 and 2009, and they've shored up their balance sheet, and they have plenty of capital, and this, that, and the other thing. Well, if that's the best condition they've ever been in, and that's the stock market's reaction to it, yikes, right? A 34% drop in 3 months for the financials? You got to be kidding me. The industrials are down 28%. The materials are down 28%. The quote-unquote winners, I use that term very loosely in this case, but the winner of all of this in the last 3 months is the utilities, and they're only down 13%, which normally for the utilities, a 13% drop in 3 months is like, Armageddon, right? As we had generally considered the utilities to be a safer place to hide out because you got to turn the lights on. Regardless of whether you have a job or not, you're going to turn the lights on in the morning. So you couldn't hide from this market today. It was going to come out and get you no matter where you were. I'm going to show you the asset classes here now. And by the way, before I switch this, I want you guys to be aware how many of these sectors in a one-day basis were down, let's call it 10% or more. The financials were down over 10%, 10.8%. The energy stocks were down 12.5% just today. Industrials were down 10.3% as Boeing got kicked in the teeth yet again. Discretionary stocks, a lot of retail names down sharply today. They were down 10.11% today. And then we also had the utilities. Think about that. The utilities in one day were down 10%. So you're not going to see that very often. These are remarkable times. Let's go ahead and take a look now at the asset classes. With these asset classes here, this kind of highlights what I was mentioning before, that you couldn't really hide in very many places. Now, Bitcoin's not on here, but be aware that Bitcoin just got absolutely massacred today, and there had been some folks that had thought maybe Bitcoin would be a place to hide out. That one doesn't surprise me as much because I don't think Bitcoin is, firmly rooted yet. Perhaps it will be one day, but I still kind of view it as more speculative personally. But one thing I was surprised about was gold. I mentioned gold on Tuesday, and I thought, maybe this is an area if you're looking for an uptrend where you can dabble. Well, here we are 2 days later, and gold has gone down both of those days since. I continue to be surprised, but if price is truth, maybe there's some disaster scenario happening in the future that's going to negatively affect gold as well. Normally, gold is where you turn to in times of chaos. Now, a lot of the theory on Wall Street today as far as why was gold down 4% on a chaotic day was just simply a source of funds. When you're getting margin calls, and I have to believe the brokers are just incredibly busy right now, just liquidating accounts right and left for people that were overly leveraged. But my guess would be that if people are getting calls from their broker and they're looking around trying to determine what they're going to sell, are you going to sell, like Boeing that's down like 50% in a couple of weeks? Or are you going to sell your gold that you might still have, let's say, a 20% profit on? Well, everybody's going to make a different decision there. But, gold itself, just because it had done pretty well up until this moment, may be one of the few places where somebody could actually still take some profits. So it's kind of a victim of its own success, I guess you could say. But this was fascinating as well. The foreign bond market was down over 2% today. Look at that candle right there. I mean, you're rarely going to see a candle like that in the bond market. Even the TLT, you can see really ugly candles here recently as well. And a lot of times, government bonds are the place to go. But, there was such a blow off top here earlier this week that even government bonds have struggled to actually kind of accelerate or benefit from the meltdown in the stock market. And of course, all of these other markets, the foreign stock markets, I don't care if you're in the United States or if you're in Europe. If you're in Europe, you melted down today as well. 11% meltdown for EFA, 10% meltdown for China and India and all the emerging markets out there. Preferred stocks were down 10% in one single day. Think about that. That's a higher claim on the asset quality is why somebody would try to get involved in a preferred stock. They want kind of a quieter experience as an investor, even though they know that they're giving away the upside potential of common stocks. Well, you couldn't hide it even if you were in preferred stocks today. You were down 10%. I mean, a lot of people invest in preferred stocks purely for the income, let's say 5% yield, something along those lines. That evaporated by twofold just today alone in price. So a lot of that is because of the stress in the financial world. Remember, many of the preferred issuers out there are financial institutions. And so when financial sector struggles, be careful in the preferred stocks, even if they are assumed to be safer than normal common stocks. So it was ugly across the board. All right, now that you've got a lay of the land and we're all kind of bemoaning this market together and experiencing history together, let's now get into seeing if there are any opportunities out there. I know it's hard. It's don't get me wrong. It's a struggle. It's a struggle to wake up on a day like today and look for opportunity. But I wanted to go back to that guy that I tend to think quite highly of, Warren Buffett, and ask myself, well, what is he doing today? What is he about to do? We don't know because we're not in his office. But one thing that he's been pretty clear on in recent years is that if Berkshire Hathaway itself gets cheap enough, he will be more than happy to purchase shares in his own company. Berkshire Hathaway had an absolutely horrible day today. I'm going to pull up chart 6. Let's do 6D. And instead of the S&P 500 like we normally look at, let's look at BRK/B. So these are the B shares of Berkshire Hathaway, the ones that are currently going for $175. Somewhat astonishing to look at that. Kind of have to do a double take there. This was a stock that was up here at 230, just a couple of months ago, and it is now 175. And this is known as kind of one of the safer stocks out there as a result of what I mentioned before. Warren Buffett has $120 billion worth of cash. Now, one thing that you might find interesting about that is if I were to come over here to the fundamentals, you'll see that the market cap of Berkshire Hathaway right now is $428 billion. So $120 billion of the $428 billion market cap is just purely cash. basically the safest investment you could possess right now. Like cash is better than gold on a day like today, as we saw with gold going down 4%. So Berkshire has been, ridiculed for a long time for holding as much cash as it had. Today is the reason why they did that. And so it makes you wonder what Buffett has up his sleeve. But to give you a sense of how historic today is, or this era is for Berkshire Hathaway, notice that we had a 10%, effectively a 10% meltdown in Berkshire itself today. It was down 9.59%. As you can see, that is like far and away a bigger meltdown than anything that we've seen here on this particular chart. But if I were to go back on a 20-year chart, 20-year monthly chart in this case, this I find remarkable. Berkshire Hathaway this month, March of 2020, now granted, it's only the 12th day, so we have to remember there's always the possibility that by the end of this month, we'll have a more solid footing and stocks will have rallied to a degree since then. But as of right now, if they close the books on March right now, this is the worst month for Berkshire Hathaway in the last 20 years. And I would guess probably going back much, much further than that as well. Remember, the B shares haven't been around for the entire 50-year history of Berkshire Hathaway. It was once just the A shares. So we don't have the ability to go back quite as much as we might like. But what I can tell you here is that on this 20-year monthly chart, we are currently down, it looks like it is 14.7% in Berkshire Hathaway shares. Back here in February of 2009, remember that was the bottom in the stock market. Technically, it was the beginning of March, but the end of February would have been the worst monthly candle, since by the end of March of 2009, stocks would have already been rallying. So the end of February is the worst monthly candle for many, many corporations out there. For Berkshire Hathaway, it was down 14.2% then. So we are literally dealing with a monthly meltdown right now, worse than anything that Berkshire Hathaway shareholders have experienced before. This is at a time when $128 of their, hang on just a second, I'm going to go back over here to the fundamentals. When 128 or $120 billion of their $428 billion market cap is purely cash, the safest thing that you could possibly have in your portfolio right now. In addition to that, I wanted to share another kind of statistic with you. Over here on FinViz, I can't verify their numbers or anything like that, but I have no reason not to believe them. If you pull up the A shares of Berkshire Hathaway, you'll notice that they are trading right now at about $272,000 per share. Remember, the B shares are a much more liquid way to access that particular company. But a lot of times you'll find that the financials are much more accurate if you're looking at the A shares. Anyway, according to FinViz, the book value on Berkshire Hathaway is $260,000. You'll notice over here the price to book ratio on Berkshire Hathaway, therefore, is 1.04%, or 1.04, I should say. In other words, Berkshire Hathaway right now is being priced as though it is worth as much dead as alive. So when you've got a book value of 1.0, it's basically saying that the accountant's value of all the assets that you hold is equal to what the stock market is valuing your company at. Now remember that the stock market generally gives you a premium to book because you are expected to make many, many cash flows to return to shareholders in the decades to come. So it is quite rare for high quality companies to be trading at 1 times book value. Now, to be fair, it is much more often that you'll see financial companies have the ability to do that because of some of the unique aspects of their business. But we have to remember Berkshire Hathaway is not a pure financial company either. It is definitely more of a conglomerate with things like Burlington Northern and Precision Cast Parts and Fruit of the Loom and Dairy Queen. Those aren't financial companies, but they are the 100% owner of those businesses. So this is a conglomerate that is basically trading at the value of all of the assets it owns. If it would just liquidate its entire business and just give all of its money back to shareholders, it's effectively what the stock market is valuing it at right now. So I found that statistic somewhat fascinating. As somebody who's followed this company for a very long time, I can tell you it is incredibly rare to get Berkshire Hathaway close to book value. In fact, Buffett himself has said on record that when Berkshire Hathaway's share price gets to 1.2 times book, that they would be happy buyers of their own stock. So I have to believe that this week, Berkshire Hathaway has been buying back their own stock. Now, so far, it hasn't really helped support the stock price, but I imagine that with a $100 billion treasure trove of cash that Buffett has, the further Berkshire Hathaway falls, the more money he's going to dump into buying shares. So I'd have to believe that there's going to be a bottom in Berkshire Hathaway at some point. Maybe I'm wrong about that, but that's at least my philosophy that I'm working with. If I'm coming over here to a longer term chart now, I'm going to pull up again ticker symbol BRK/B. And I also wanted to show you how ugly, these weekly candles look right now as well. Broken support all over the place. So you might be wondering, well, where is the next level of support? Now, obviously, since this stock has been in an uptrend for so long, and many of you understand the concept of old resistance becoming new support, there could be a number of different support levels out there if you're interested in purchasing this company and trying to get a grip on where a bottom might occur. But one thing that did stand out to my eye was this area around 150. So you'll notice over here, in 2014, so this was December of 2014 right here, we got this overbought cluster signal. That's what that red dot means right there. And as soon as that happened, Berkshire Hathaway stock started meandering lower. It eventually bottomed out here at about $120 in early 2016 and then start rallying up. Well, you'll notice you got yourself another red dot there, another overbought cluster signal. So it pulled back for the next several weeks. It went up again, got another one of those red dots right there, and pulled back again before finally blasting out. You can see that that was kind of a bottoming pattern that was taking place during that 2 calendar year period right there. But some of you might identify a bit of a cup and handle type of a shape to that, where you've got this nice cup right here, you've got this little handle over here, and then this candle right here was a really nice breakout candle that got us clearly above those prior resistance areas, and then it was off to the races. So some people have been kicking themselves ever since then, saying, shoulda, coulda, woulda, right? If only we could have taken back time and got involved in Berkshire Hathaway on that breakout, on that candle right there. Well, people who would have been patient enough to wait for an international crisis like we're dealing with right now with COVID-19, maybe you're going to have your opportunity again if this market continues. You might very well be able to buy that stock at that breakout zone of about $150. Right now we're trading at $175, so that would mean another $25 drop from here. That would be, maybe about 15% or thereabouts. So it's certainly possible that can happen. Stocks are moving 15% in a day these days, it seems. But remember, not all stocks are created equal. And a lot of people have kind of given a golden seal to Berkshire Hathaway over the years because of its conservative nature, because of the prudence of its management team, because of all the cash that it owns. So what I'm going to do for our trade application example on this historic day today is I'm going to sell a put on Berkshire Hathaway at the $150 level. Now remember, the nice thing about having the VIX as high as it is, so VIX, you can see here, the VIX is way up here, touched 76 earlier today. This is a dramatic move. We are up here closing at 75. As I mentioned before, this is basically the highest the VIX has been since 2008. So the nice thing about that, because there is so much fear in the system, is options prices are extraordinarily expensive right now. If you are bold enough to be selling options, you can try to take advantage of that extreme movement if you do not believe that this is the new normal, right? What we've learned about the VIX over time is if you were to pull up a 20-year chart here, the VIX has dramatic moves. It did it here in 2008. It did it here during the flash crash of 2010. It did it during the credit downgrade in 2011. It did it during all the China industrial problems that we were having in late 2015. We saw it here in 2018 as well, a couple of different times. Remember the terrible Christmas time period that we had there. So there are times when fear enters the system and everybody is in a panic mode, sending the VIX higher, sending options prices extraordinarily high. But one thing that we have learned through history is that those prices don't hold. Those VIX prices don't hold. Eventually, traders will come to their common sense. Eventually, whatever is concerning the market at that moment in time will go away, and we'll get back to remembering that stocks are pieces of businesses that actually make profits and distribute those profits to shareholders. Whether that happens tomorrow or next week or next month, I don't know. This is a different scenario, as every time is. But what we do know historically is that extremely panicky and fearful VIX is not a permanent condition, it is a temporary condition. So if you can kind of get that into the back of your skull and remind yourself that this might be an opportunity, as painful as it is, to be selling some puts on companies that you deem to be extremely high quality, then maybe there's an opportunity there for you. So over here on the trade tab now, I'm going to type in BRK/B, and I've got the April contracts. These are the monthly contracts with 36 days until expiration. And you can see over here, the $150 strike is mighty juicy at this point. The $150, again, I'm targeting that because that's where the old resistance was, which could become new support. That was where we had the cup and handle breakout. So you can see that the bid and ask is very wide. I've noticed that this week, that the options markets have gone haywire. And when you look at them after hours, the bid-ask spread are very wide. So I'm not sure exactly where this is going to open tomorrow, but what I can tell you is that there were 21 contracts of this specific strike traded today, and the last traded price was $5.75. So I'm assuming we could probably get filled at $5 even if we really wanted to. That's a little bit closer to the bid than the ask in this particular case. In other words, if we sold this contract for $5, that would push our break-even price or our cost basis on this down to $145, because you'd basically say your obligation to buy 100 shares of Berkshire Hathaway is at $150 per share, but you get to take in $5 of credit up front. So your true cost in that, if Berkshire Hathaway continues to fall, eventually, if you were put that stock, your cost basis would be a little bit more accurately $145 per share, which of course hasn't been available in many years. And you'd have to believe that right now Buffett is going to work. He is either buying stakes in companies, he is talking to people about sweetheart preferred deals, or he is just simply buying his own stock. And many of those scenarios should help support Berkshire Hathaway's stock itself, some directly, some indirectly. But regardless, this is generally viewed as an extremely high-quality company, which up until just a few years ago was a AAA credit rating by Standard & Poor's. It no longer does, but it's just a couple of notches below that. Nonetheless, this is one of the preeminent companies, not only in the United States, but in the world. So if you can get paid handsomely to sell puts on something in a crazy, chaotic moment where Berkshire Hathaway, which typically has implied volatility closer to 15, which now has 66 implied volatility, extremely juicy premium, then, why not? Why not? Now, again, it's a higher price stock, so some of you with smaller accounts might not be able to achieve this. You do have to, think about putting $15,000 to work here, but I think it's an interesting opportunity. So I'm going to go ahead and do it. And even if Berkshire Hathaway continues to melt down, and I'm completely wrong about this, that is a level where I would not mind being the owner of Berkshire Hathaway for the long term. So I'm going to click the bid price. I'm going to change this to $5 even. I'm going to even change this to a good till cancel order. So that way, if we do get some sort of remarkable turnaround in the stock market first thing tomorrow and we don't get filled, that it could still be working for us in case we have other meltdown days on the horizon in the coming weeks. So confirm and send, taking in $500 to saying that we are willing to buy 100 shares of Berkshire Hathaway at $150 per share. And these are the Class B shares here that we're talking about. Send that in, and we'll see if we can get filled on that first thing in the morning. All right, thanks for joining me here on this historic day. I apologize for the length of the video. I think this is probably the longest market outlook video I've ever done, but considering the circumstances, I wanted to kind of take us through the psychology of the last 24 hours, because this is a video that folks will be watching in the future as well, wondering what in the world was going on today. We're all dealing with a lot of financial pain. Some of you might be dealing with health pain. Let's do our best to keep ourselves safe and healthy and in a good enough spirit to trade another day, meaning be careful with margin and leverage and all those scary things as well. So that way you have the ability to trade another day whenever we have a recuperating stock market. But at this point, I don't think the signs are necessarily there that this is the bottom. Is this part of the bottom forming process? Potentially, but we might need to experience a bit more pain. So in the meantime, ask yourself, what stocks would you like to own in the year 2030? And look at them today and ask yourself if those are opportunities for you today. You know, in the case of the Berkshire Hathaway trading example in paper money here tonight, that might give you some ideas of how you would go through that process in your own mind of selecting higher quality companies and taking advantage of this crazy, chaotic market that we find ourselves in. So I hope you got value out of tonight's video. If you did, do me a favor, go over to Twitter and click like for me. That really helps support this product for David and I, and it's your way to let us know that you want us to do these videos as often as we can. We appreciate your viewership. David will be back with you tomorrow. All the best of success with your trades and your investments. Goodbye for now.